The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday through Friday, 11 o'clock till noon, 877-927-6648. Pleasure to be here. And thank you, Steve, for 2 great hours. Straight after this show, of course, you've got Larry Pesavento. We've got programming all afternoon. Now, one of the reasons why for subscribers to my opening calls, my daily service, very comprehensive service with the charts notated with the Chapman wave. One of the reasons why we had gone so bearish for us. Remember, this is the birthday of the rally from 2009. That was March the 3rd, where the diamonds and the Dow made its low, and we went long that day. It was the Friday. That's because of the DOG and the DIA moving in counterpoint, and I was getting a potential peak D in the DOG, which is 100% short the Dow, and at the same time I was getting a buy signal in the Dow and the DIA. That signal only came in on the Monday, the 6th, for the S&P. Now, what's really important about what I'm looking at here, one of the reasons why last week, for us, this is the heaviest we've been short in, I can't remember them being this short in quite some time. And there are a couple of reasons. Let me just note and articulate them. The first one was that the Dow went to a leg F, and nothing about this really said recycle, not at this particular point, but there was that possibility on Friday. Friday I was away. I was actually on my way down to, I was already, yes, right, on Thursday night I left to New Orleans just for a couple of days visiting some friends. Cold. And we had a good time, just relaxing. Did go down to the French Quarter just for a meal on Saturday night for a celebration, but that the Mardi Gras was done and people were complaining that it was just so cold. And it was. Did warm up yesterday, and then of course all the planes were delayed. It's just a remarkable thing about what's going on in the airline industry. There was a time, almost like the Greyhound, when it was full, they just bring on another Greyhound. They used to bring on another plane. Well, those days aren't gone. They are history. Those days are just kaput. In fact, what they do now is they just keep juggling. They just juggle and juggle and juggle. If you have preference points or anything like that, you get a little bump up. There are a whole bunch of things. If you don't, you're just out. And you just sit there waiting. So we're very lucky to keep moving along the line. It turned out that the flight that we originally booked on for the connection in Charlotte, we got there exactly on time to be able to get on, except we had already booked for the for the next flight because it didn't look like we would make it. You never know. But everything worked out, even though it was delayed. Yeah. And the other thing, of course, is leaving the airport with one flight and coming back on a different carrier. You're in a different parking zone. So it was fascinating. Anyway, here we are, starting the new week, a little tired and ready. And one of the reasons why we went short, for us, as I say, quite fully short, going into last week, and have added to that position, to one of the positions, is that if there was a peak F top, that's the 6th highest peak from the low bar in the Dow, made on the 5th of February at 15,340, it would resemble in letter, not necessarily style or character, but in letter of the Chapman wave methodology. That's the reason why this methodology is so robust. There is enough flexibility for you to be able to say, these are the parameters I'm watching. It usually should work. Yes, U.S. Airways on the way back. Actually, I can get into that, but let's just move on. A question of the den. U.S. Airways, how did we treat you? we'll get into that. Mostly it worked out. It's really, a lot depends on the attendance that you have in every form of life, wherever you go. It isn't necessarily always the company, although I usually say things will start from the top down. It is how you are treated by an individual, how you respond to them, how they respond to you, and what they do. And this person, I'm trying to, Iona, I can't remember her name now. She was really good. Just as I was about to give up because they wanted to take us to Los Angeles, and then back to New York, and then to Boston. She just came through and worked out very well. So that's the answer to that. So one of the things about this methodology is that if after a peak D or an E or an F, but especially a D or an F, the sixth highest peak from that low bar, and at 16,505 on Friday, we snuck to a new recovery high, not all-time high. That's at 16,588. 16,589 would become an all-time high. If today, instead of being up about 40 points or something like that, if we close down sharply, strong double-digit to triple-digit down, then I would say I'm pretty sure that 9-period exponential moving average, which is at 16,324, which I mentioned to subscribers today, is going to be really important, plus the volatility index. These are going to be the factors that we would want to be looking at. Number one. Number two is that while we're looking at these factors, you can start off with a turn in the market. Now, a lot of the action last week was so selective, and a number of the sectors that we monitor really closely were not acting that well at all. What I need to say is that in looking at the overall picture, there was enough evidence to say that internally there were a couple of technical indicators that were suggesting that the upside was very limited, which meant that the downside, conversely, could become unlimited initially, because the only real support we so far, the 9 points higher. But if that gets taken out today, that's really negative. And then the next support really is that low that we saw, that Monday opening that took us down to the 16,071 level. So that's 300-something points lower. So I'm just going step by step saying we've implemented our positions. At this particular point, I believe we only have one long position left. Another one was taken out with a nice profit. It was a much better profit, but it's still a very nice profit. And this other one that we've got left is up about 1.5, so for 2 points. Let me just check before I say anything here incorrectly. Yeah, about 2.5 points up. And what we're looking at is in looking at the Dow, there is enough evidence to say that the Richard Arms Index, the trend, has rallied strongly to 220, which says we could get a bit of a bounce at any point going into tomorrow. But right now, the daily Dow and the daily S&P are suggesting that there is a turn at hand, and the volatility index having jumped to 14.97 says, I'm alive, I'm active. My high today was 1528. My low just recently on the gap was 1538. Haven't filled the gap, but that's what we'll be watching to see if that happens. So as it stands right now, I can't see the clock, and I don't want to go over time. Yeah, as it stands right now, there are a bunch of things that are going on that say this is more to the negative side of the action that I would like to see if we are short. But the day is young. Anything can happen. I'm going to go through the numbers. Dow's down 89 at 16,364. S&P's down 7.5 at 1870. Gold is, what is gold? Gold's up 4.5 at 1342. That's nice action for gold. Silver's down a tad, down 0.02 at 20.90. Platinum is down 88 cents. It's done very well so far. It's at 1480. High-grade copper, it thinks it is down at 312, and that to me is part of the clue that said to me, it's one of the factors, not the factor, it's one of the factors that said, watch copper. Copper is acting very poor. It's bouncing back very nice from intraday low today of 299, but it's still very poor action. And the weekly chart says be careful for those H patterns, especially in the monthly chart. But the weekly chart says you better hold. This is copper. I better go to the contract. I'm going to the M contract. And let's think HGM right now. Yeah, the HGM contract has taken out, but it hasn't closed yet, but it has taken out the very important 3.0745 low back in the week of the 28th of June of last year. And now let's quickly go through. Bonds are up only 1 penny at 131.06. Day is young. This is very important to note. And the dollar's up only 0.08. Now, this what's really important is that the euro finally made that leg D. It made the leg D, and it could turn into a peak D, but right now it's a leg D, leg in the daily, leg E in the weekly, and leg E in the monthly, and it's broken above the resistance trend lines. So I'm going to be watching this real closely. And last night, USD JPY was acting very well. It is at 3.247, also at a peak D. The H pattern that becomes a very sharp breakout to the upside. Watch that one closely. So let's go to our first caller. We got John in Jupiter, Florida. Hi, John. How are you? John, you there?
Hi, good morning, Basil. How are you?
I'm well. How are you?
Great, great. My question was in regards to shorting the Russell through RWM.
Yes.
I was looking for an entry point.
Okay, let me just give you a quick, give folks a IWM made a peak E in the Chapman wave. That was on the 4th of March at 120.58. It is a leg D with a potential peak D if there's no new high this week. And in the monthly chart, it is a very powerful move to a leg E. This is very interesting. It's an all-time high. But let me just put this into perspective. I want to go back to 2000. Was it around in 2000? No, it was around in 2000, but it came after the high was made in the S&P and the S&P and the Nasdaq, and the high was at 54.59 then, and subsequently in 07 went even higher to 85.20. We've almost made a one-to-one move from the low that was made at 60.09 in October of 2011. Okay, so the monthly chart, it could have recycled, but right now I'm calling it E. I'm calling it at least leg D with a potential peak D this week in the weekly. Now, the question is what to do, because it was the strongest of the indices, then it sort of lagged, and then it's holding now a little bit better than some of the others. Now, you don't have a position right now?
No, I don't.
Okay, so give me a second, and I'll be right back. We can discuss it, because I'll probably suggest nibbling at something, but give me a second, and I'll be right back. We'll be back with John from Florida. The Dow's down 90, it's 2007, and this is Basil Chapman. This is Tiger Technicians.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. We're actually looking at the IWM, which is the iShares, the Russell 2000 for John in Jupiter, Florida. And what I'm looking at here is that what I call the rudder, that is the instrument that will actually start the turn, if it's a boat, of course, or if it's a plane. But it also works if it's a stock. Why? Because the very short-term indicators are the ones that are going to give you at least the shorter-term turn. So what's happened is that the IWM made a peak E in the Chapman wave. That's the 6th highest peak from the lowest low bar start, which was on the 11:30 on the 20th of February. That was the last one. And it went to a peak E top at 118.71 at 11:30 on the 28th. Was that 28th? Yep, 28th of February. Pulled back pretty sharply for this instrument. It went from 118.71 down to 115.58. And then what happened? It had a huge spike to the upside and it went to 120.58, and that was on Friday, the 4th. That couldn't have been Friday. That was on the 4th. Then it pulled back and it had a sudden spike up on Friday the 7th, and that was to 120.47, but it couldn't make it, that extra 9 cents to challenge the 120.58 level. So now what I'm looking at is that there's been a pullback in the IWM, but the candle that's forming right now in the 120-minute chart says, I tested the low. The stochastic went down to about 42%. The fast-moving average went a little lower. And the MACD looks very ugly, but the price has managed to bounce back quite strongly. That's number one in the 120-minute chart. And the daily chart went right to 118.49 and 118.54 or 52 at the time was the 9-period exponential moving average. So we tested it, and it's bounced off it. So my suggestion here, John, is that I always say the day is young. In fact, the day is young right up until just before 4 o'clock, although things aren't like they used to be. There was a time some years back where right up until the very 3-4 minutes after the close, the futures could do unbelievably wild things. It's much, much calmer now. When people talk about volatility, I look at them as if they don't know what volatility is. This is not a volatile market. This has been a straight-up market. Now I believe it's starting to get volatile. So, sorry, can I just ask you, do you have any position at all in a short position on the IWM?
No, I don't.
Okay. So then this is my recommendation. I'd not get carried away. I'd start a very small position. Is the RWM, the Pro Share, is that a 200%?
A 1-to-1. No, 100%.
That is if it's a 1-to-1, I feel very comfortable saying if it's a 1-to-1 at 16.21, I'd start a position right now. But I would start, when I say start, I do mean a smaller position. And I'll tell you why. There are a whole bunch of things that are going on. And if the RWM starts to retreat and it goes back anywhere close to the 1604, 1595 area, then I'd say, you know what, we might be ready to turn around, but the IBM has enough residual strength just to hang around for a little bit longer. It's number one. Now, here's the other thing that's really important. If you start a position now, if RWM starts to take out the high of the candle of the 4th, which is at 1637, to me, that would say that there's a really good chance that the IWM, the Russell 2000, is starting to turn down, and that the candle of the 3rd, with a high of 1674, that was that ugly Monday, that's the candle would be the target to the upside. So here's my scenario. You nibble here. You just start a position at 1621. If later today or tomorrow it even gets towards 1628, no, I'm not going to make it that tight. I'd rather be a little careful and say if it breaks above 1631 between now and tomorrow afternoon at any point, I would then add another, what I call a small position, like a trading position. And the whole thing about this is if it starts to make higher highs and higher lows, we will see very quickly the 1674 high of the 3rd taken out, and that could be as early as Wednesday or Thursday. But the day is young. On Thursday when I was here, I said I'm not that keen on looking at, I said that the S&P was much weaker than the Dow, and that kind of divergence is usually negative. And then we saw intraday there was that sudden pullback. And then Friday was also another day with a pullback, much sharper pullback, yet the Dow still closed higher. But I'm suspecting that we're starting to see the energy to the upside being usurped. So I suggest start a little position here, a penny above today's high so far, and I would add another small position. Hope that helps you.
It does. Thank you very much.
Thank you very much for calling.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. I had a couple of questions in the den. One was the IWM. I'd mentioned extension, one-to-one extension. What was the extension? That was from the 34.26 low in March of 2009. That went to the peak D high of 86.82 May of 2011. Remember, that's where we've had that's been the sharpest correction we've had. In fact, since the rally began 5 years ago. And 60.09 was the quick sharp drop. That's 20 points. I mean, that's 25%. No, 20%. And what happened was 25%. And then what happened was from 60.09, the extension went to above what should have been right there, 112-ish. It went to the high that we've just recently made of 120.58. That's the extension. So it's slightly longer than the one-to-one match. And the other thing is looking at the weekly chart of the IWM Russell 2000 iShares. The stochastic has spiked quickly to 86%. The MACD has crossed positively as it did towards the close on Friday, but it's going to be really important to see whether or not the IWM takes out 118 support between 118.52 to 117.66. That's going to be key support on the daily chart in the IWM. And as I said, the day is young. Today we've got the opposite, where the S&P is slightly more positive, or down minus 4.37, and the Dow is down 60.64. And that should translate to some kind of strength. And believe me, a move like this is not going. I don't see, unless you've got bad news, I just don't see how you're just going to suddenly find ourselves with 3 triple-digit down days this week, unless there is real bad news and the volatility index, which right now is at 14.65, gets to the high 15s, 15.80 or higher. Then you will start to see a persistent move to the downside with commensurate move in the market down to the downside with commensurate bad news. So I'm saying to myself, okay, we've got our positions. We're going to manage them as carefully as we can. They're up. They are up nicely. Some of them up very nicely. But I always treat short side in this particular market with great trepidation and skepticism. It has to prove itself by seeing a concerted effort of time and points. I don't want a one-day wonder. To me, that's no good. And I'll quickly change. There are a couple of stocks that are acting quite well, so I don't want to be on the wrong side. Now, the other question I had was Netflix. See, this is a very good instance. Netflix made a peak E-top Thursday of last week at 458.99. That was just above the 457.79 peak D that was made on the 25th. And now it's rolling over with a Chapman wave leg, body, neck, head, and now the beak forming of that stalk leg formation. And I've still got this alternate count in the weekly chart of C/G. To me, I dislike that intensely. I like to say we're going up or we're going down. I want to say G is very negative and C is still very positive. So I have to step aside and say the weekly has given me no signal. The monthly has given me a signal only in that the monthly chart is extended to a round number. Round number? Why is that? Around 458. I wrote that incorrectly. 458 round number high. How many round numbers are there these days? At the highs, round number high. I don't know if it's an all-time high so far, but no, sorry, it is an all-time high. I don't know if it's the high. That's what I meant to say. And that's good to know. All right, so it's real easy. You go 1 penny above 458 in Netflix, NFLX, trading at 436.97, down 1140, down 2.51%, and it's recycled to the upside. And that means that the weekly is extended, that leg C, to possibly leg G on the upside. Still no signal there. So all I'm going to say is make it real simple. In my methodology, a break below 428, the round number low that was formed, 425 and 428. Now, did I write that incorrectly? It's 428, no, 425. Oh, what a day I'm having here. This should be 425 was a round number low on the 13th. A close below 425 this week in Netflix says, be careful. Netflix is in for a deeper decline in time and price, and that whole area between 400 to 393, I think it is, 397, that's going to be sacred, because when that goes, it's going to try to fill the gap in the 360s very quickly. So I'm just going step by step, and I'm saying for peak D in the den that, yes, if you are interested in shorting Netflix, you can do it. I personally would also think more in terms of doing a put, the put side, preferably quite close. I wouldn't go too far out in price. I'd go a little further out in time, not March. I'd make it April, and I'd be looking at something like the 435 to 430, because if it really kicks in, that's going to be a very nice gain. Now, here's the other thing. Quick question, and it wasn't a question, just a statement. And the statement is plug, P-L-U-G. Yes, I know this one well. Not pug, but plug. This is Plug Power, Inc. What a move. So it's really tough. 372, 375, 375. So that's parallel high. So that's A, B, C. I don't believe this. Got to believe it. It is a brand new A to B to C in the daily. Brand new leg F in the weekly. And it's unbelievable. I looked at this the other day. My question here, I used to do this for subscribers. I really don't do it very much anymore. Actually, I don't do it at all anymore. Because we used to have quite a lot of success But then I found that it turned subscribers into really short-term traders. I didn't really like that. Yeah, sometimes we have very short-term trades. You get in and you get out within an hour, but most of the time we try to hold positions as long as we can. And this is one of those things where, the gap up on the 3rd in plug power, you want to get in at 583. Oh, man, that's a breakout. That looks like, yeah, it's broken out, but you can't buy the high. Oh, yeah? If you had bought the high, the next day gaps up, goes to 709, doesn't fill the gap. Instead, what it's done is the gap's up again on Friday and the gap's up again on today. And today it's at 998. So we were I was looking at it in the actually it was in the 4s, and then it broke out. Ballard Power is another one. BLDP, I'm just guessing now. Yeah, Ballard Power. Well, look at that. Where do you get on with these things? Do you get on now? Because tomorrow it could be not at 616, having made a high of 634, and a low just the other day was 337. Do you get on now and say, hey, I'm going to ride until it turns around? Well, this is leg E in my work. Even though E can go extend and go to an F, this is hazardous to your health and wealth. So some of these stocks are really moving. They've been laggards forever. I mean, I had a friend who bought Ballard Power. I don't know if I can even remember when it was. It must have been, I know he bought it up in the 12s or 14s or something like that. Yeah, let's just say it was 2003 or something. And then he got out of it somewhere around near the lows. He always does that. So that would be somewhere in the 3s or maybe a little lower than that. And he was right. He analyzed. I said to him, I don't know if I like it right now. This is, he wanted it. So I said, all right. Well, he always just calls me up every couple of years about something that he likes. So I said, okay, you got the right idea. He said, this is a company I've read about. It should do very well. Well, it has done very well. It went from the most recent low of 56 cents in 2012, November, and right now it's trading at 624. I mean, I don't even know what you say to something like that. You just say, wow. Now, anywhere up until the 4th, that's last week, I would have said, if this sector is on fire, you can just grab it and hold on to your hat. You can't go too deep into it. You just grab some and you just ride it. And you put a stop in, you make a stop, and if you get a gain, you make the gain. You make sure that you don't lose any money. At least make a few cents, but do not lose. And that's the only way you can play these things. If the sector becomes sexy, you grab it, just like Tesla was. But I believe that Tesla is now going to be looked at as a potential battery company. And they might have there it is. See that H pattern right there? I think the 265 round number high in Tesla made on the 26th of Feb, that's going to be a problem. So a question in the den, could I look at FB, which is Facebook? Absolutely. Facebook, FB, trading right now at 71.84. It's up $2.04. Now, we had a call of this recently, and I said I wouldn't be buying it here. I'd buy any kind of a dip. And then if it recycles, you'll know very quickly if it recycles, because it'll make a new high, and then I have to rename the new high. So we've renamed the new high. I drew in that pattern that I call the falling axe. This is just merely, this is the way I call it a falling axe. Why? Because it looks exactly like an axe. Look, you got your long handle, you got your expanding blade, which is pointing down. You break above it, and what I said is, my methodology says that in this particular instance, if it breaks out, you can have a 1-to-1 to the upside. 1-to-1, and that would take you to the breakout point, would take you to 71.80 or 71.81. Today's high is 72.08. So it's broken that by a tad, and it's in leg D. Now, this is a little difficult. I'm going to make the suggestion, if you're long Facebook, some part of your position, because of market conditions, not yet because of Facebook, although have a close look, and you'll see that when the MACD was up in the 96 area, was it 96 or 95? 90, when the MACD was in the 97 area, 97, as it was moving from that peak D back around about the 14th of February, the MACD was still climbing. The stochastic was at 97%. Now look what's happened. It's pulled back very sharply technically. Price didn't pull back sharply. It did on a visual basis, but in points it's nothing. To go from 71.44 down to 66.51, 4-5 points in a stock like this, nothing. Now what's happened is the strength, but the MACD is near cross positive, and the stochastic's at 81%. Still good, but way underneath what it was. So I'm looking at it and I'm saying, let's go to 120-minute chart. So let me finish the 120-minute chart. That was a peak C right there. That was a D and a top right there. And then what it does, it makes the cup formation, I call the drop bucket formation, does that. And then it pulls back sharply. So it goes to 71.44, pulls back down to that low of 66.51, and then it goes peak, A, B, C, C2, or what am I doing here? 71.97, 71.94. So that's a C1, C2. Give me 1 second. Anyone? I'll explain what I'm doing right now. If you're looking at TV, it's a technique that I developed where I use a slight hills. And all the technicals are suggesting sharp pullback at D, but it just didn't quite make it. 2, I put a red plus sign, no down arrow. So unfair. You can't put a down arrow on a lower high bar, even though that's the one that suggested we're going down lower. You do go down lower, and now you've popped up to what? You popped up to 72.08, so that's a fractional, that's a continuation. Now that's D. So D actually gets fulfilled. And now we're going to see. So here's my recommendation. You own Facebook. First of all, if you own Facebook, you got a core position. I don't want you even to listen to me on this because you've been right. You've held it correctly. We've had it a couple of times, but I haven't held it wrong. It was a buy and hold, go to sleep stock. I still think it's the best, one of the best out there. So I'm going to make the suggestion that a part of your position should have a little bit of a tighter stop now. And I'm going to do that. And there's the cup with the handle, not one of my favorite patterns. And in this particular instance, I would say that some part of your position should have a low, some kind of a, I would get out of some part of your position below 69.47. Why? Because I think it'll test 66.51, the low of the third, and if it takes that out, then Facebook and the general market are going to have a deeper correction. And what I would suggest is if it holds really nicely between the 68.50 to the 66.30 area, and then the market seems to have digested the losses and now wants to start rallying again, you can add that position back. So that's my situation there. Love it as a core position. On a shorter term, just be a little careful. I'd be thinking in terms of raising a stop, leg D, very modest leg D after peak C. I'll be right back, and then Joe and the Den want to look at LIT. I'll be back, and we're looking at LIT for Joe, 877-927-6348. I'd love to take your calls. Dow's down 61, S&P's down 4.25.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. Now, just took a little dive there. It's down 76. S&P's down 579. You know, the action we're looking at over the last few days, where every opportunity, although it's gone higher, every opportunity has seen key stocks start to turn down. To me, I'm looking at bearish action. I feel very comfortable in the positions we have, not comfortable enough to close my eyes, but to say, okay, market, we've done all our homework. You tell us now if you have the strength to go to new highs, in other words. That's all that we can do. This is just the best you do in this business. A question about LIT, LIT. LIT is the Global X Lithium ETF. Most important is that it's an IPO, so it's really hard to tell historically, but it did start off at about 15 or so back in 2010, then it skyrocketed to $23.79, plunged down to $11 round number low in June of 2013. Let me put in 11 round number low. Amazing what these round numbers can do. And now it's had a very strong bounce, and that bounce has taken it to 14.25 today, up 9 cents. But it went to a peak E in the Chapman wave just 3 days ago at 14.42. I like this action very much. I like the action of the weekly chart. So, Joe, I'm going to suggest that if you have a core position, I know this is easy to say, and it's easy for me to say since I do not have the position. But if you have it anywhere in the 12s, I'd be prepared right now to give up some potential gain, because I'd love to keep that as a core position. And if it's able to hold 13.99, what's the 13.99? The low this morning was 14. 13.99 is a 9-period exponential moving average. I have a sign that says there should be limited upside, but it's also saying that there should be limited downside towards 1376, 1350. So I don't want to tell you what to do, but if you're asking for my thinking, I don't think this is a single leg D up in the weekly chart. I think it's going to hold, and then it's going to try to retest the highs. So I would try my best to hold it. Now I'd have a small position that I would try to add at between 1385 to 1355, only if it pulls back there and then starts to rally. And if it starts to rally and gets back above 14, I'd either 1350, I'd either start a nibble over there, and then I'd have a really tight 20 cent, 25 cent stop, or I would say I want to buy the rally off that 9-period moving average. And that would be your trading position. Why? Because the way it's looking, if LIT, Global X Lithium ETF, can get anywhere into the 1458 area, there's just a good chance that finally the 200-period exponential moving average, which it tried to break above, and it hasn't been able to since it collapsed back in the week of the 5th of August of 2011, that 200-period moving average is going to become an active member of the technical society right now. And all of a sudden, 1484 will be your magnet. I suspect if it gets there, it'll go to 1508. Then pull back under it, and then turn that into a very important magnet, propellant-repellent line, and you won't know if it's going to be a propellant line until it gets to the 1550s. But that's the way I'd go step by step if you're in the position. If you're not, then I just nibble at it between 1370 and 1350 with a fairly tight stop. Okay, now we've got limited time, so let me just run through the numbers as I'm seeing them. As I say, in my opening call, we are very short. This is the shortest we've been in a very long time. And we were in a short position. Let me just quickly do this. Okay, so what we're looking at is for the Dow, a close in the next 2 days without taking out, let's call it 16,505. A close below 16,290. We'll say, be careful. We're going to be going down at least short term. And watch the VIX. If the VIX spirals, that'll be it. Stay tuned for Larry Pesavento.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.